I don't know if you'd call that a Santa rally or post-Christmas rally, pre-New Year, whatever you want to call it. That was just the market bouncing a little bit, still closing red. So anyway, let's recap the markets today. I'm also going to cover some large caps that I have my eye on for two reasons. Some are very significant and will help take down the markets, which we've seen, for example, with Tesla. But mainly Apple and Amazon also pretty significant. They're big movers, and if they go down, usually the markets will find a very difficult time trying to go up. But also some of them good bounce plays. Not necessarily Amazon and Apple because I think they're going lower, but there are some large caps. For example, Tesla. Actually, I've already mentioned that when it was around 109, but also I think Zoom, PayPal, Paramount. I think they're quite good bounce plays. I'll get into that later, or you can just fast forward to that section. Anyway, very quickly. So let's start with the S&P sideways, right? It was lower during the day. I think I made a video pre-market or 30 minutes into the market. They were at the low of day. It closed at high of day, but still red. So to me, the last trading day of the year was just a sideways day. Nothing really special. It wasn't an up day. It wasn't really a down day. It's just sideways. So I'll quickly go through it. You can see the Nasdaq trying to curl off its second last support. I don't think we're going to bounce much if we do early next year. I think we'll bounce. Again, that high of Wednesday. If we look at the SPY, the high of Wednesday that will act as resistance in all indices. And I don't even know if we'll get there. I think we'll start to test lows and flush back down. So, you can apply that logic to all of the general markets. Let's look at the Dow, same there. It's had actually quite a tough time trying to break out of 33,400, let's call it, again, with the Wednesday, the 21st, acting as total resistance. So let's see what happens Monday. I think next week we just fail again and eventually we roll over. Russell 2000, same thing. So, I mean, that's it. That's all I have to say about the general markets. It's all the same. The VIX, I don't know why I keep covering it. I mean, at least it was green today when the markets are slightly red, but otherwise, I think it should go back up to 26 when eventually the markets flush down to new levels. Also, the DAX, by the way, okay, it closed whilst the US markets were at their low of day, so it makes sense that it's also red. But you can see how it's also finding a bit of a difficult time taking out its Wednesday, Thursday high. It's Thursday because Wednesday closed early, but that high, which is also previous support here, right? You can see that it's always the same. Price support becomes resistance. I think we'll flush and we'll go back down to this area here. I might as well draw the line. So around here, let's call it 13,500. It doesn't have to be totally accurate. So I think that will happen when the same happens to the US markets. Let's look at interest rates. So for me, they look bullish. The 1 year, it take 1 or 2 days max for new highs to set in. The 2 year, yeah, the 2 year is also closed very strong. Just got to take out that little 4.45. Then off we go to 4.57-ish, and then we test the old highs, and that will be the most important. Again, I always say the 2s and the 10s are the most important. So the 2 looks very bullish. The 5 year also, right? You can see I've gone over the resistance points. I should really draw them, but that one's pretty obvious. 4%. And actually this one closed at 4%. 10 year also right at resistance. Got to break out of this descending line. Did I draw the descending with the 5 year? Yes, I did. Okay. The 30 year, same thing. So just got to go up high, test the descending, go sideways, break out. So very bullish on the rate still. And also something I noticed, I'm going to miss the Japanese because that's a bit special right now, but look at the German 10 year. That is the most significant one of all of Europe. This is the same as the US 10 year. That's closed at new highs. I think that's all you need to know about Europe. If anything, if any chart, the German 10 year. So the Bund or whatever it's called, extremely significant stuff. For me, any continuation there will send the DAX lower, no matter what happens in America almost. Italy not far behind, and the difference between these two will put stress on the target 2 system also. Yeah, watch out with Europe. That might even start the whole process lower in the general markets worldwide next year. Aside some Russian offensive or obviously the war, and actually European energy markets didn't suffer as badly so far. Winter's not over because winter has been mild. It hasn't been that cold. So, but anyway, let's look at the UK. Okay, that's far from reaching its old highs, but I think it will. So yields up, and we can and remember to pay attention to the German one. Let's look at the currencies. So the DXY actually closed lower than it has in a while, right at support. You could say even ventured below. You can see that it ventured just a bit below. So actually made new lows and closed pretty much at the level. So we could very well get to descending support. Like I said, I still think we're going to break out of this descending um, resistance here, but the dollar has been weaker than rates. So it's interesting to see rates basically climbing and closing bullish whilst DXY is bearish. It's um it's an interesting new sort of pattern. So let's see, and let's also see how the currency markets relate. So you can see the euro closing at high of day, basically highest close in a long time. So can we go even higher? What's the next support zone? I mean, let's see if we can take out 108, let's say. But I think prior support becomes resistance. You can see this support here. It's not a horizontal support, it's ascending support. So is that ascending resistance? Let's see. Let's see. We've got to first take out 108. US dollar, Japanese yen. That was red again because the DXY was red. So that had a low close. You can see how this descending resistance was perfect, actually acted perfectly. Next level is already drawn, 126. Let's see if we get there. And finally, the pound. I mean, that will take a lot for it to get back up to its 124. But anyway, the point is, all those combined basically equal the DXY. And yeah, let's see, DXY looks pretty bearish, although I still think we'll break out this descending line. It's just a question of when, actually. So just to recap again, markets bearish, rates bullish, dollar, I don't want to say bearish, but ultra short term bearish, but everything else bullish. And what does that mean for gold and silver? Well, obviously, with the dollar acting very weak, gold and silver actually ended the day quite strong. And when I was looking at it initially, not pre-market, but early in trading, it was very bearish. And here we closed green. So gold actually was stronger than silver. That's slightly rare, but definitely not unheard of. We just keep hitting our head at 1825, 1830. This was the strongest close in a long time, in months. So that's actually quite bullish now. And this ascending support that we keep bouncing off, we're not flushing. And I'm starting to wonder whether I'm wrong about this flush here. Because if the dollar closed so weak next year, I mean, next week, next year, once we resume trading, if the markets go down, rates go up, if the dollar goes down, I don't even think it matters what the market does because gold and silver is starting to buck the trend a bit too often. And I was wondering, maybe gold and silver go up if the markets go down, because that pattern used to play out quite a lot. In fact, it played out just after the Russian invasion. And as markets started to crumble, gold and silver miners were going up. And then when the markets really tanked, then everything tanked together, and then gold and silver tanked with the markets. So I feel like gold and silver might even keep climbing this wall of worry up, unless the markets really just flush to new lows. Then I think we'll go down, but not that much. We'll probably never make new lows actually with gold and silver because it's just so resilient. And you saw the report of Russia and China just ferociously buying. I mean, they're obviously ready for the to depeg from the dollar system completely. We've seen so many articles, not even in months and years. It's been a slow momentum shift. They don't want to depend on the dollar system at all. Obviously, makes sense. Russia had its assets seized. I mean, why would you keep your stuff in dollars? And to me, the whole power is shifting east anyway. So they're going to make their own sort of I don't know if they'll make their own currency, probably not, but gold will be their currency for trade, money for trade, not currency. But anyway, I'm just starting to wonder whether gold just keeps climbing and basically starts to hit the 1840, 1880 level that I was indicating here some weeks ago. Silver also, you can see, it's very close to not flushing, but closing below this descending support, which would then start the momentum move lower, but it didn't. And it's hitting its head around this zone. Let's call it 24.10 to 24.30. And if it breaks out, then it goes to this descending support, which for me is very strong. Sorry, descending resistance. And for me, it's very strong resistance. The gold zone, I think once we hit 1880, very strong resistance, but it could find resistance before then. It's very hard to call this resistance. I would say 1880 ultimately, but it probably fails before then. But I don't want to look too far forward because you have to look at what the dollar's doing, what interest rates are doing, what the market's doing, how they're all interacting, and how gold and silver and the miners start to interact, depending what's happening in every asset class. So, but for now, I'm really starting to wonder whether gold and silver don't break down and care more about the dollar than the markets. That's the key. Do they care more about the dollar move lower than the market move lower? And if the dollar moves lower, the market could move higher. You have that short-term bounce that's possible too. So gold, the precious metals, I'm not short-term bearish anymore. I hope they go lower because I've sold this range. So, I haven't touched any of the miners that I own for some time because I've already sold this zone and it's definitely not gone lower to buy back. All I know is if we do go lower, I will be buying back pretty early because it's shown so much relative strength that I would not be surprised if we don't go all the way down, no matter what happens to the markets. So I'm holding, if I sell anything, it's going to be if we start making a move to 1880. Let's look at the miners. They did, thankfully for me, close red. So they look like they're still following the markets more than the metals, the underlying metals themselves. So I have this one thing going for me. And to be honest, the way I trade the precious metals is through the equities, precious metal equities. So I'm actually in GDX and GDXJ rather than gold and silver mainly. So I'm still looking for a move lower. I'm not touching anything. And you know what? Even if it makes a run all the way back up here, I've sold the top part here. So it would really have to go all the way up here. Let's say GDX 33, which would probably be gold 1880. And the GDXJ, probably all the way up here, 42, 1880. And it would do that. It would just propel higher. These things move very fast. So yeah, that's my take. Now I'm gonna quickly look at Bitcoin. Actually, I'm not because I've already covered it. I think we drift lower. Of course, if the markets bounce a bit and the dollar drops, the effect will probably be a small Bitcoin move up. But I think if we were going to move higher, it would have been at this period here where we tried to reclaim prior support. And I remember having this line drawn. We failed. It looked good at the time. Then the market went lower and bam, we lost the selling support. I think we move lower with the markets. And I think the markets will move lower more than the dollar. So I'm still bearish Bitcoin and it needs a flush. And I think more and more people are seeing this possibility here. And you had that MicroStrategy news of him buying, what was it, 2,500 Bitcoins at a price of, God, what was it? I think it was around where we are now. So, people think that's bullish, but no, that's already happened. So, sell the news, buy the rumor, sell the news. I don't think anyone was buying the rumor of MicroStrategy, but they sold the news because he's not going to buy now, is he? He's just bought with an average of 30,000, which is pretty horrible. So, I wouldn't trade Bitcoin according to MicroStrategy news, but it's just another reason to be bearish. So I'm bearish Bitcoin and the miners because I'm bearish the markets and Bitcoin, but also the energy proponent to the Bitcoin, the crypto miners doesn't help because it's costing a lot to stay in operation. So I'll just quickly show you the miners. This is Coinbase, it's not a miner, but it's new lows. The only thing it's got going maybe is a breakout of this, which it's done. Actually hasn't done yet. But the general markets, a lot of the stocks have already, so they're underperforming. underperforming the general markets. MicroStrategy, look at that, just cliffhanger. It'll bounce to the markets, but it'll flush this. And when MicroStrategy flushes this, you're going to get some real pain because it can get to 100 very quickly. And I don't know where his max pain is, but a lot of people will be jumping all over this. New shorts will come in and algorithms will destroy this, I think, to 100, which is a massive drop. Like that would be, minus 30% move. So MicroStrategy, watch out. Marathon mining just destroyed. To be honest, looks like it's going to bounce too. I always see this sort of possibility here. Maybe that one's, you can see here how it might break out and just pump like 30% soon or something. But still very bearish stuff, Old support maybe here, $5 max. Riot. I'm not going to draw the line. Actually, I like drawing this line. It's my favorite one. But, it's a good bounce play for a little swing trade or day trade even. But these miners have been destroyed. So a little bounce play is there. But, if Bitcoin goes lower and the markets go lower, it's going to be very hard to justify and move up in these. What I wanted to cover is actually some of the blue chips, the large caps. So Tesla, I did say around 100, although actually, to be fair, 137, I thought it was a buy. The gap fill. If you remember here, 137. Well, I didn't say it was really a buy. I said it's going to get there, and it's a better buy there than where it was at the time. But yeah, if I was really bullish Tesla, I would have bought there. And then the next time I looked at it, it was basically here under 110, and that was a buy. The point is, it's totally oversold. Maybe not as much anymore. If the market bounces, I can see it getting to 137 actually. At which point it's probably a bit of a sell because it would have bounced quite a lot relative to other stocks. But if the market goes lower, you get Tesla again at 100. And if the market really crumbles, you will get Tesla lower. You will. It's not allowed for Tesla to rise whilst the market crumbles. You might have some market red days, slightly red or slightly sideways, and Tesla goes up another 8-10%. But if we have a real flush, you could get. I'm looking at this zone here actually now. The low of this period, let's call it 92, 91. That you could get that. So because it would go to 108, obviously get to 100, and it'll probably flush 100 because they like to just stop out. Lots of people hit their stops, trigger them, and that would probably take it to 92 where it gets bought back up. So this target is way too big. But the point is, watch Tesla on the way down. It could move up a little bit. 137, I would sort of sell what I have, to be honest. Yeah, that's what I'll say about that. Just some other stocks I'm looking at. Paramount, which I used to own, I sold up here just under 20. I like it. I just don't like the market, so I haven't bought it yet, but I wouldn't be surprised if it makes another move up here to 20 and hits resistance again. So I'd be selling again under 20, maybe 1949 or something. But another move low, I would rebuy an initial position in Paramount. I closed it. Peleton is another one I like. Look at that. It was looking very bullish, came down with the markets, and it's come all the way back down to kind of just above support, which is also good. It's a good sign. So I think this could bounce all the way back up to 10. So this is a nice swing here. Peleton, that bike company trying to reinvent itself, but is really looking sort of bankruptcy potential. So it would really just be a swing trade. Zoom, one I've liked for a while, haven't bought it. So this one I would also like because, not to be an expert in Zoom, but it's done very well during the COVID times. And it's come all the way back down, even though I don't think its balance sheet is that bad. I haven't looked at it. I've just heard that it's not bad at all. So I don't think you can justify a move all the way back down to pre-COVID levels, So I think this is a great trade, actually, long term. As long as it doesn't go bankrupt, you can make a nice, I don't know, 30, 40, 50, 100% move in this. If the market bounces just a little bit, look, all the way up here, 120, we're at 67. So, but I mean, I think this will act as resistance, obviously, in the very short term. But if we break out of this, you could see a continuation all the way back up to 120. So almost 100% move. So Zoom, I like. PayPal, another one where I remember I actually did own this on breakout here, the descending. I saw the 88, then it had good news. It actually pre-market was all the way up to 120, but opened here and it's just drifted low with the markets. And now we're all the way back down to the lows and we're breaking out the descending. So this basically is going to go up unless the markets, I think even the markets go down, it'll go up a little bit, like 10, 15, 20%, and then it'll come back down. So PayPal long term, I like it. Teladoc is another one, which is okay. I think it's another bounce play. Docusign, actually, I like quite a lot, even though it's nowhere near as low as the others. It's just a lot of strength. I think had very good news, so you could see a continuation. Just some that I got my eye on might interest you. But anyway, these are sort of little swing bounce plays. What I think really matters for the markets are the big stocks, the Amazons. And look at this. I mean, we've seen the markets, we know they are. I'm not going to actually, I'll draw the descending. Amazon is just, cliffhanging again. And it could bounce and you see resistance here, not because of the descending line I just drew, but also you can see here it failed to go higher. So I'd say 95, 89, I'd be selling that if I own it, if it does go up. But sorry, I think it'll just, it could pop and then flush this. And if it flushes this line, look at this line, then just draw it randomly. It's the low of this March 2020. It's the low COVID low. That's where we're bouncing off. So obviously it's support, but it's not strong. And it's underperforming the markets. So if it goes lower, you can expect NASDAQ, S&P, Dow, everything just to go lower. And then we go back down to this level, not straight away. It won't go all the way to 66. It'll probably hang around 75 and whatever, but it'll go lower into this zone. So Amazon is definitely something you should be watching every day. Apple, maybe even more than Amazon. It did flush. It's low. The support zone I identified anyway. But wait, where was March 2020 low? Yeah, my God, forget it. We're very far from that. But the ascending support that takes into account March 2020 will become significant if we flush with the Nasdaq. Obviously, Apple, a lot of people love it, and it'll be bought up before we get down here. But I think the ultimate support will be here. And if we have a real market crash, which I think will happen, it'll get Apple at 100. And that'll be a pretty damn good buy. Although I still think there are better buys. But yeah, Apple and Amazon, watch them during your regular trading days, because if they go lower, I don't see how the markets can really go higher. Google is another one. Now it's not at its old lows, but not far from it. If Amazon and Apple start to make a move lower, Google will straight away be here, and then it'll start flushing, and it'll just be this cycle of just they'll be influencing each other lower. Intel, this is not one of the big market boys, but that's also a kind of blue chip that's hanging off its just above its prior support. So any flush in the markets, this goes lower too. Delete this, it's no longer relevant. Disney, another one that's not really a big market contributor, but it's significant enough to, I mean, if you have Disney down 10%, the market will probably be a little bit red, for example. So it does contribute a little bit. And again, look at this support that it's near $80. If you lose $80 in Disney, you have to go to the weekly almost to see what's next. 70, keep it simple, 60. We'll see, but that's a big move lower. Already down more than 50% for sure, 60% almost. So those are the ones, and I'll end with. I'm not going to go through every stock. I'll just end with Credit Suisse. I absolutely love my little Credit Suisse because it is pure trash. Where is it? Here's the banking sector. Let's go to the daily. I mean, you know the story, right? Look at this, just Chinese penny stock looking stuff. And what a rally. Not really. We're looking for that close below $3, preferably below 298 actually, and preferably below this line, which might not be perfectly drawn. So but just below 3, look at that, 304. And we've had a mini Santa rally. So imagine we start to resume the bet. Imagine we go lower next week or the week after. Really low. Market flushes. Credit Suisse is at 280. Then you have this serious financial crisis. So did everyone see that FDIC video where they're really talking about issues, structural issues, and we can't let the public know. Like there are some serious things going on, and it's not credits. It's not just Credit Suisse. It's everywhere. There are cracks. The system cannot take the interest rates we have, and Jay Powell has shocked everyone by basically reaffirming that he wants higher rates. He wants the markets down, and he wants higher rates for longer than people think. So we will get our crash next year, and it might be very, very early. It might start in January, very, very early. So anyway, I hope you found this useful. All the stocks, all the sectors. Otherwise, Happy New Year and see you. Well, yeah, see you next year.